consider this, like the average gold price for the last 3 years, if that's now a floor and there is a big breakout, those ridiculous numbers that we were embarrassed to talk about of how many thousands of dollars gold might go to, those are realistic, right? We've already just put in a new nominal all-time high. I mean, it was 2152 or something like that for a flash. We're close enough to that just a 10 or 20% move, nothing major, a 10 or 20% move puts us solidly in a new regime. A 30, 40, 50% move in the gold-dollar exchange ratio.
Bloomberg Commodity strategist and other leading experts have predicted that gold prices could rise by 50% in 2024. According to analysts, gold is forecasted to reach $2,700 during the first half of 2024 and eventually hit $3,000 by the end of the year. The Bloomberg Dollar Spot Index dropped 1.2% last week and touched a 4-month low after the Fed held interest rates and projected 75 basis points of reductions in 2024. Lobo Tiggre, aka Louis James, the founder and CEO of Louis James LLC, anticipates a potential gold market breakout with a transformative shift in the gold-dollar exchange ratio, 30 to 50%. He also views global central bank currency debasement as beneficial for gold, emphasizing the ECB-Fed contrast on rate cuts. The ECB left interest rates unchanged last week and guided for steady policy in coming months, even as investors piled pressure on the bank to follow the U.S. Federal Reserve in signaling rate cuts given a string of unexpectedly benign inflation data. Regarding the U.S. dollar's decline, Tiggre suggests that gold enthusiasts closely monitor the multivariate currency competition. When the U.S. dollar weakens, gold becomes more affordable for those holding different currencies, which boosts demand, and as a result, drives up the price of gold. Meanwhile, Lobo predicts gold as his top trade, citing confidence in its potential amid what he views as a global recession. WisdomTree's forecast currently projects a 3.1% inflation rate at the start of 2024 and a 2.60% rate by the third quarter. This persistently high inflation could push up demand for gold and, subsequently, gold prices. He acknowledges gold's long-term value, but suggests that current central bank decisions may be less significant for those holding gold and silver over decades. Now, we present the clips of Lobo Tiggre's insights from his recent interview with Liberty and Finance. Before we continue to delve into this discussion, please subscribe to our channel and activate the bell icon for timely updates.
If you think of gold as money, then you look at gold as a Forex transaction. That's why I always refer to it not as the price of gold, but the gold-dollar exchange ratio. Right? If you look at it that way, then you can't just look at one central bank's actions. You have to look at it in the context of the other central banks and their fiat currencies. And what are they all doing? Well, they're all debasing, therefore yay gold. But in this particular moment, we had Lagarde came out, and there was a very black and white difference. It's not just a nuance of her scarf was a deeper color blue than Powell's tie, right? And the nonsense that people look into. Powell said, he admitted in the Q&A, he said, yes, we talked about when to cut rates. Lagarde said exactly the opposite. We did not even discuss rate cuts. So the ECB decision nominally is the same as the Fed's, right? They did nothing, both paused. But Powell talked about rate cuts. Lagarde says we're not even talking about it. The distinct difference there, much more hawkish. So today, as you and I are recording this conversation, dollar's down again. Euro was up in comparison. Alternatives to the dollar are up while the dollar is down. And I think this is in part due to the ECB, not just the Fed. And going forward, people who think that gold is money need to keep their eye on that multivariate race. Now, if you have a very long-term view, if you're stacking your gold and your silver, right, for the decades ahead, these gyrations don't matter. You and I know that gold is money, right? Silver may be the poor man's gold. Darth Silver might have some things to say about that, but, they're real values, which will be there when all the fiats continue their race to the bottom, right? The race to debase. But if you're investing in mining stocks, gold stocks, silver stocks, if you're a stock market speculator the way I am, like I save in bullion, that's not a question. But if I'm trying to make money, I'm speculating on the stocks. And then we have to have this other consideration we talked about, where is the dollar wrecking ball likely to go next? For the moment, it looks good for gold, for monetary metals, because the ECB has come out more hawkish than the Fed. But that could easily change. I stood in front of a large audience at a gold bug conference in late 2022, gold bug conference, and I said my highest conviction trade, I'm bullish on gold and silver and other things, but my highest conviction trade for 2023 is uranium. And they didn't boo me and throw rotten tomatoes at me, but I'm not sure how many people listened. So for our audience here at Liberty and Finance, you'll be happy to know that I stood at that same conference and I said, last year I called uranium, that worked out pretty well. This year, my highest confidence trade is gold. And I feel I'm not just a gold bug excited about gold. I mean, that's hardly a headline. The difference is that I look at what I see as this global recession unfolding, all these other things, and I have that level of confidence that I had about uranium last year, I have about gold this year. I think it's all but baked in the cake. I'm very keen, and I am looking to put my own money into this right now.
During the interview, LoboTiggre highlighted a surprising Sunday night spike in the gold market, defying expectations of industry insiders and traders anticipating a decline. Gold prices climbed on Monday, buoyed by a weaker dollar and bond yields as markets awaited U.S. inflation data due this week to ascertain the Federal Reserve's policy path after a dovish spin last week. Spot gold was up 0.3% at $2,023.47 per ounce. U.S. gold futures rose 0.1% at $2,037.70. Furthermore, he predicted success for well-positioned mining firms with higher gold-dollar exchange ratios and foresees positive prospects for junior gold stock investors. Gold's recent ascent to record highs has the predictable but still important impact of lifting shares of the companies that mine the yellow metal. For example, the VanEck Gold Miners ETF, GDX, and the VanEck Junior Gold Miners ETF, GDXJ, are both higher by 10.52% over the past month. Let's get back to the interview.
I will say that I think that spike that Sunday night was very significant. I mean, I think most of the industry insiders, the veterans, I mean, and I'm not talking mom and pop types like you and me that we go down to the local coin shop to buy our shiny new Buffalo or Maple Leaf. I'm talking, comics traders and whatnot, Wall Street types who dabble in this. They have been waiting for gold to go back down the way it did after 2011. And in many ways, it's astounding that gold has held up that well in the face of what I think is the conventional wisdom that we had another spike and it should go down. And so for something like that Sunday night to happen, this big move to be to the upside instead of the downside, with so many skittish, long-tailed cats in a room full of rocking chairs, right? We didn't get the market reaction that you would think. There was a big move, and it was up instead of down. So that tells me there's a significant shift, that maybe the bears have started to realize that gold's not going away. And that changes a lot. If people who had their fingers held over the sell button, not just waiting for gold to visibly break down so that they wouldn't be the last one out of the rooms. If now they're switching and they're thinking about the buy button because, it's not going down. Well, maybe the next big move is up. Well, I don't want to buy too soon maybe, but I don't want to chase it. But if the next big move is up, I have to be thinking about that buy button. So it's just one night. I'm not going to, bet my whole portfolio or bet the farm on just one move like that. But I think it's very significant. And the action that we've seen since then, gold above 2,000. I mean, you think about it, for the actual business of mining gold, speculating on junior gold stocks is a whole nother kettle of fish. But for the actual industry, for the business of mining gold, the gold price since 2020 has been fantastic. It's been a dream come true. And the better companies have made tons of cash. And the not so better companies have had the opportunity to repair their balance sheets and fix up their assets. Operating assets and so on, rationalize their portfolios of mines and projects. I think that sets the industry itself up for tremendous success going forward. if I'm right about higher gold dollar exchange ratios ahead, which your audience probably is sympathetic to, those companies having cleaned up their acts or working on that now should do very well. And the good news for the people like me looking for those hockey stick charts, right? That junior that gets taken over or makes a big discovery, the setup for the majors to be in shape to make those acquisitions in the years ahead is very positive. It's hard for me to tell anybody that gold at 2044 or whatever it is at the moment, that's a cheap bargain, run out and buy gold. But fortunately for buyers, the gold stocks have underperformed. That bearishness that I talked about, the people with their finger over the sell button, that has held many of the gold stocks down, unreasonably down, like unrealistically down compared to their earnings capacity. That's an opportunity. Now, long-suffering gold bugs, they don't want another opportunity. They just want gold to go to the moon now and take their gold stocks there now. Sorry, right? That's not in my power to deliver. But for those who are looking to buy, those who are coming new to the thing, I think that's terrific. Like the metal has been at or near record highs for 3 years, going on 4. And the stocks are on sale like when gold was $1,000 cheaper. That's a huge opportunity for anybody who's new to it or anybody who has liquidity and has the guts to see that. And so, okay, tax law season didn't bring us quite the buying opportunities I'd hoped for, but there's still great companies that are relatively on sale. If they're not at 52-week lows anymore, many of them are still, let's say, closer to the 52-week low than the 52-week high, let's say, in the bottom half of their range. And that's an interesting opportunity, like right now, as in this week.
Gold has recently tried to surpass the $2,100 price mark, indicating a potential early stage in the precious metals rally. The spike in gold prices and positive prospects for well-positioned mining companies add to the overall optimistic outlook for gold. What strategies and indicators would you suggest for investors looking forward to a gold rally and aiming for new highs? Share your thoughts in the comments section below. If you find this video informative, don't forget to support our channel and turn on notifications to stay informed about our latest videos. See you in the next video.